What's up, everyone? It's Caddy with Money Vesting. Welcome on board for yet another week, last full week of May, and this is also the 8th week. We've already had like a very strong losing streak for the markets. S&P 500 and Nasdaq both 7 consecutive weeks of losses, and the Dow Jones obviously 8 consecutive weeks of losses, and this is going to be the 9th week for the Dow Jones to see if we can break that streak. And of course, for the S&P, the Nasdaq, this is going to be 8th week to see if we can actually break that losing streak as well. So thank you so much for joining, everyone. I really appreciate it. The Nasdaq ETF up over 63 basis points right now, so not a bad start. S&P 500 ETF up over 1%, and the Dow Jones is up a little bit over 1.12% as well. So we did talk about a lot of fundamentals, macros, and technicals over the weekend. So hope you all had a great weekend and are ready for yet another week of, we'll see. I mean, the probability, the odds are definitely in the favor of the Bears. But at the same time, my expectations is at least a short-term bear market rally here for us to see if we can get some upside. But 3% green on QQQ today. That would be crazy, but it is definitely possible given how volatile the markets have been. It definitely is a possibility with the 10-year yield is up 2%, so back over 2.8%. And then we got oil just more or less consolidating, and then crypto prices also. Bitcoin's back over 30,000. Sam, I have ordered it, so the green mic is coming. Again, I ordered it on Friday as promised, so it's going to take a while to come through. Once it's here, I'll definitely be replacing that. So we just got to be a little bit more patient. It's coming, all right? So it's going to take some time to actually get here with shipping and everything, but we got to be patient. It's coming. Upstart with a lawsuit, really? Let me just take a quick look. UPST here. So we're slightly down about 3.5%. So let's see if there's any news on that. All right. So Upstart Holdings selected by Sharon View Federal Credit Union to offer personal loans. That's not it. Apparently there is something. Brandon says when the green mic comes in, that will be the bottom. It could be. You never know. I mean, it's supposed to come sometime this week. So as soon as it comes in, I'll replace it with this one. So hopefully it marks the bottom this week. We'll see. For Upstart, I don't have that catalyst flip for now, but I'll see if I can find it on the internet and not just on TradingView. But nonetheless, we are starting to push a little bit higher. This is the overall trend on the QQQ that we've talked about. We just got tagged at that fib level at 0.236. The S&P 500 was down to 3,800. Then on Friday, we had the bulls step right in. And the Nasdaq also got down to 11,000 points. That was a very critical level. That still is. And, this week is probably the most important week for the Nasdaq, especially when you look at the monthly chart. If we actually break down, then that would be a big technical shift for the Nasdaq. If the bulls can hold that level and if you can find that support, then if we can get another validation and continue to follow that trend over the last 14 years. So we'll keep a close eye on that trend. We'll see if the Nasdaq breaks below 11K, 11,000 on the monthly with the 50 EMA, and then 10,700 on the weekly with the 200 moving average. So those are going to be the two levels between 10,700 and 11,000 is going to be the one to watch. So, all right, GLS says, are you going to swap back to red when we're overvalued? Yes, I think I should do that. I think I should make this like a subtle thing about my channel where I just switch in between mics where when I am a little bit more risk averse and I think the markets are somewhat overvalued, I think I should bring out the red mic. And when I think that these are incredible buying opportunities, when the markets are undervalued and the multiples have compressed and everybody's fearful, I should bring out the green mic, which is just, my way of saying that, hey, so it's a green light. Green light means go ahead and start buying a little bit. So I think I can do that. It's a great idea, GLS. I think that's something that we can definitely incorporate on the channel here moving forward. So, but the idea was for this to obviously, turn this into like the meme from the Office Space in the movie, and for me to do a live stream of me destroying the red mic. But maybe we can do that, right? Keep it, and then of course switch in between, and do it. Obviously, it's not going to be a day-to-day switch, right? Because it's going to be more about the valuations and multiples and see, where we are trading overall. So If so, keep the red mic until the end of 22. Yes, I think that would be a great idea. Yes, we can take a look at Chipotle as well. I think Chipotle, I've really never done any type of analysis. By the way, guys, I really need new ideas on what type of videos, content you guys want to see, because I feel like the last week we have covered so many different things. Like I've talked about fundamentals, valuations, different individual stocks, technicals, macro updates. Like there's just been so much that we've already talked about, and now I'm like getting to a point like, what else can I possibly talk about? I even did a video on the private companies, right? 6 private companies that I'm really interested in. So we talk about 6 potential IPOs that are going to be coming out either later this year or later down the road that I'm super interested in. But now when I'm thinking about it, what is left? What is there left to talk? I'm pretty sure you guys all know, the valuation part on the S&P 500, the markets. We understand, individual sector wise, which sector grew the most, where individual price earnings multiples are, the S&P 500 overall, the technicals on the Nasdaq, the technicals on the S&P, individual stocks, which stocks I'm personally buying, and then of course macro updates on all 3 indices. So there's been a lot that we've talked about. So, all right, let's take a look here. Bro Ryder says, yep, you pumping out weekend videos. I love it. Great. That's great. Swap nil portfolio allocation rebalancing videos, please. Yeah, so I'm actually going to be doing that specifically for our Patreon members. So that's going to be more of a Discord member video. I do them usually every month or every quarter. I do like an update on the portfolio with allocations and different positions that I have. So that's something that I will consistently just be doing for the members. We need an hour of meditation. That I think would be a good video, right? Just 1 hour of meditation. It'll probably be like a 15 minutes, not 1 hour, but maybe like 10 to 15 minutes of just straight up a live stream of me meditating. Nicholas, yes, options trading. So what type of options trading content do you want to see? Like tutorials or trade ideas? You want me to go and find opportunities, present them to you guys, like top 5 leaps to buy or top 5 cash secured puts, or more like tutorial videos on, selling cash secured puts, covered calls, and vertical spreads and all that stuff. So let me know. And, I'm open to ideas. Even if you watch this video later, just leave them down in the comment section. And I'll incorporate that, in my future videos for sure. All right, so tutorials, great. Okay, that's great to know. How to dollar cost average, I think that's a great topic. Videos for people who have small starting budgets, that's also a great idea. Thank you for that. So video on MicroStrategy has over 100,000 Bitcoin on the balance sheet. So those are more like individual company analysis, right? So that's going to fall into our stocks under 30 minutes. I mean, recently we've done videos on NVIDIA, Costco, Zoom. The list goes on and on, right? That's the whole playlist on there. But yeah, we can definitely continue to kind of build upon that and do more individual stock videos as well. But anyway, let me just start off with the actual poll here. So bond trading, that's an interesting topic. I never really heard anybody talk about trading bonds or super interested in trading bonds. Bond investors have been killed because of inflation. Real yields have been negative for the longest time because of how inflation is. So obviously bond is, just as bad as holding on to cash, if not worse. So investing wise, bond really doesn't have that appeal anymore. But trading wise, I haven't really looked into trading bonds, but that's something that maybe you can do some more research on together. But anyway, let's take a look. Markets today. And we'll see how many of you guys expect the markets to be green or red today. All right, so let's see. So video explaining why buying ETF or shares to live off of dividends is not a good idea. Okay. Interesting. Yeah, I can kind of go over some of the cons that there are with actually living off of dividends. It really depends, that's one of the things, right? Investing is so subjective. And that I think is one of the things that has led to this community being like just in the financial services industry to being so at each other, right? We've seen Jim Cramer criticize Cathie Wood. Obviously Cathie Wood has criticized S&P 500 and the index funds. There's just been a lot, of people going at each other in this community. And I think investing is so subjective that everyone's, all right, who agrees with this statement? or disagrees with this statement, right? So let me know in the live chat. There's only one way to make money in the stock market. Do you agree or disagree with this statement? That if I tell you there's only one way to make money in the stock market, would you agree or would you disagree with that statement? So let's see what people have to say here. So disagree. Alfred says disagree. Good. You should disagree with that statement in general, right? Because obviously there's not one way to make money in the stock market, right? There's millions of ways, right, to make money in the stock market. So many different strategies, so many different ways, right? So what we need to understand as investors is that everyone has their own specific strategy, right? If Warren Buffett is a value investor, he's a value investor. He's been successful doing that. If Cathie Wood is a super high speculative growth, innovative stock investor, so far she's been successful doing that, right? So I think we're getting to a point where investors in general have forced their strategies onto other people. And I think that's what led to Jim Cramer, going at Cathie Wood, or people just, obviously targeting each other. But in my opinion, I think there's so many different ways to make money in the market, and everybody needs to find their own and perfect that and find their own strategy long term. So because there's just so many ways, there's no right or wrong way. It's just what suits you and your personality and your risk tolerance and your financial goals. So that's what it comes down to, right? So I think that you should go grow a beard until we have a green week. Oh man, that would be a very, very, that would be, I wouldn't be able to do that. But yeah, the point that I'm trying to make is that everyone's got, obviously a different strategy to invest in the markets. And it's very easy to obviously, criticize if in the short term it's not working out. But, long term, as long as it's working for you and if it's aligned with your objective and your goals, then, who's any other person to call you out, right? Nothing really. So YOLO is the only way. That's one way, definitely. But yes, people, thank you so much for taking the poll, but also make sure that you also drop a like. Sam, thanks so much for reminding me that. And yes, make sure that you also drop a like. So we don't have CPI this week. CPI was already in the first week of May or the second week of May. So we already have that out of the way. And this week we do have GDP though. We do have GDP numbers coming out. We do have the new homes index, and we do have the FOMC meeting minutes also coming out later this week. So those are going to be the two really important things, the FOMC meeting minutes and the GDP numbers. So two really important things for the markets. But more or less, I think my focus is going to be on the technicals. Mike says, where is your glow today, Caddy? I've honestly been exhausted, guys. Not going to lie. Like, I needed some sleep because I feel like the last 7 to 10 days, I even mentioned this in our Discord, that the amount of research, I've done and the papers that I've read and the notes. I mean, I even watched the 1 hour long Jeremy Grantham and Ray Dalio's interview that was posted on Friday. I don't know if anybody's checked it out, but it was their take on the current environment and the economy and emerging markets and everything. Again, 57 minutes long. I just been pages and pages of notes that I still got to summarize and put a video out. I know I'm a little bit late, 3 to 4 days late, but I've just been really exhausted, to be honest, the last 7 to 10 days. But yeah, that's, I think it's good for us all to be on the same page, understand, different perspective from different people. We talked about Cathie Wood, we talked about Nancy Lazard from Piper Sandler, we talked about Michael Burry as well in my previous videos. So we'll we'll continue to monitor what the economic sentiment really is and where the valuations go. So anyway, we got less than 3 minutes left for the markets to open. We'll go over and split the screen here for Wei, talk about individual stocks as well. But yeah, damn, I lost my glow. We'll bring that back soon. We'll bring that back. Yeah, Mike, thank you so much for that. I really appreciate it. So Jings don't exist. Love the red mic. Yeah, I do have the green mic coming in shortly. Hopefully by end of this week, we'll have that, and then I'll switch for the green mic. So what about Nancy Pelosi's calls for the third and fourth quarter 2022? What does she have calls on? Does she have calls on the entire market or specific stocks, or what is she actually trading? Because I know her success rate is almost 100%, right? She's really, really good in spotting opportunities in the markets. All right, so Tesla here, down 1%, $650. I feel like I really need to step in here. Sub 600 is what we're watching. How many people think that Tesla's going to see sub 600 today? 620, by the way, is going to be that next technical support. And anything under sub 600, I am going to be interested in Tesla at those levels, even though my fair value ends up at 475 around those levels. But yeah, 600 and lower, I think, would be an interesting opportunity. Best Buy, by the way, reports numbers, I think later today. They have obviously been hurt by this entire retail sector getting hurt pretty dramatically, with Target, Walmart selling off, and then Costco is also later this week. So Costco, Dollar General, Best Buy, we still have some pretty big retailers reporting numbers, and I don't see how they weather this inflation without hurting their margins. So I would be really shocked if they report some very strong numbers and if their margins go up, if not stabilize at the same levels. And of course, if they also raise their guidance or anything. I would be surprised if they actually do that. All right, so off we go. The sentiment overall, 60% green, 40% red. We'll see where we are. Friday was obviously a lot of momentum back to the upside. I mean, the Nasdaq here on Friday rallied over 2.8%, almost 3% over the last 2 hours. And the S&P also had a big jump of 2.5% in the last 2 hours. So lots of buyers stepped in. And you know what the interesting thing is? The Nasdaq came down to 11,000. Like on the monthly chart, it literally kissed the 50 EMA and the buyers stepped in. Same thing with the S&P 500. It came down to its fib level, 3,800. Kissed that price point and then literally right back up, shot up to close at a much higher price point. So very interesting price action towards the close on Friday, and then obviously we're opening much higher here on Monday. We'll see if we actually close this losing streak, if we actually end this losing streak for the markets here. With Tesla 655. Google here, 2187. So we did see a breakdown for Google below 2230. PayPal slightly higher. AMD. Oh, by the way, I didn't even go over the reports. Oh my God. See, I'm so freaking exhausted. I don't even remember this. So sell-off could be headed for another leg down as two bullish analysts are forced to cut numbers. This was super interesting that I wanted to go over. Oh my God. All right, so the markets are open. I will go over that shortly once we kind of take a look at the markets here, individual stocks, we kind of settle in. Completely forgot. Nobody even reminded me. I was like, Caddy, what about the morning presentation or like the morning update here? Come on, you guys. But yeah, so we got CVS up, Truly pushing higher, Southwest, Marathon, Vertex. So more or less just a flat start to the day. It's not like all stocks are very green or very red. It's more or less just like a mixed open. But we do have some names that are like Upstart's down 5% today, 6.6%. I do have a covered call on that one with $55 strike. We got up to 53 and then we reverted right back down. But apparently Philip mentioned that there is a lawsuit on Upstart, which I don't have any idea about. I'll probably take a look at the report here if I can find it. And then we got Neo, Grab, Upwork, Peloton, Datadog. Nvidia's down 2.4% right now. So Nvidia is selling off right before the earnings. My fair value ends up at roughly 125 based on very conservative earnings growth and PE multiples. So we'll keep a close eye as well. All right, let's just go over this. I think it's important. So one of the things that is really important for the markets is earnings, right? Earnings growth. And that was one of the things that I mentioned literally just about an hour ago video where Michael Rui was saying that there's going to be a big sell-off coming and stocks are overvalued or they're poised to sell off. earnings growth is very important, right? That's really what moves the market is earnings, right? Earnings per share. Because if you think about it, everything is tied to earnings, right? If there's tensions between Russia and Ukraine, what gets hurt? Earnings, right? Because businesses are leaving Russia, so they have lower earnings. If inflation is higher, what's hurting? Companies' earnings. If people are spending less money, what's hurting? Companies' earnings, right? Profit. So earnings are really important. And Mohammed El Arain noted last week that the market was entering a new phase, and he was asking why aren't earnings estimates dropping. So right now, analysts on Wall Street have earnings estimates still pegged at roughly $228 or $230 per share in EPS for this year for the S&P 500. And initially, this was a sell-off based on interest rate fears and based on financial conditions tightening. Today, it has all the elements of also being a growth scare. He is likely right. We are in a growth scare, which is translating into earnings worries. That is different than what we have been seeing so far this year. So far, the market's been dropping because of tightening from the Fed, from the monetary policy standpoint, increasing rates, inflation being really, really high, running at a 40-year high. And now, Mohammed El Arain is saying that we are dropping based on a growth scare, right? The earnings are not going to grow as fast as what we have seen in the past. So the stock market has been declining because investors are taking down the multiples, which is the PE multiple for these companies. And the multiples is what investors are willing to pay for forward stream of earnings and dividends. And S&P 500 forward 12-month multiple has declined from 22 at the start of this year to 16.4. Right, so this is also a multiple that I talked about, which right now we're trading below a 5-year average, we're trading below the 10-year average, and the 25-year average also sits at roughly 16.5, which we're also trading below of, right? So very, very low multiples for the S&P 500, so we're trading at a very cheap price. So I'm just going to call him Mohammed. So Mohammed, the comment implies that there could be another leg down based on concerns about growth and earnings, but the analyst community doesn't seem to have gotten the memo. So estimates for the S&P 500 increased last week. So today, as of today, they're sitting at $220.85. So if you look at where the S&P 500 is, right now we're at $39.29. So $39.29 divided by $228, it would be at 17.2 times earnings. And then when you look at for next year, $251, we would be sitting at roughly 15.6 on 2023 earnings for the S&P 500. But while much of the increases was due to energy estimates going higher, so energy stocks have done really well, much of these estimates of consumer staples, technology, communication services remain unchanged over several weeks ago. And the loan sector that is beginning to see estimates cut is consumer discretionary. So what they're saying is energy got a revision up. Analysts came out and revised their estimates up for energy. For consumer discretionary, they cut it down. And for staples, technology, and services, they are flat. They are actually steady. So that could be a bit of a concern because staples we already know is getting hurt because of margin deterioration. Their earnings are slowing down because of inflation. Technology, we're going through the same thing. People may not be spending as much. And same thing with communication services, right? You look at Google, you look at Meta platforms. I mean, those multiples have come down so much because earnings are not growing as fast, or at least they're not expected to grow as fast. So he asks a simple question, why are the analysts so slow to cut estimates, and does this mean another leg down is imminent? Because if those earnings estimates get cut, the S&P 500 multiple immediately gets shot up even higher, right? So for example, simple example here, right now it's at $220. If tomorrow all analysts come on board and say that, you know what, for 2022, we think that earnings are actually going to be $200 per share, look what happens to the price to earnings multiple. From 228, which is 17.2, down to 200, it goes to 19.6. All of a sudden, you've got a S&P 500 which is more rich than just a few days ago because the earnings expectations were much higher. So we jump from 17 times earnings to 19.6 times earnings because the E in the denominator, which is earnings per share, is getting cut from analysts. So that is a bit concerning. So Nick Wright, who covers earnings at Earnings Scout, agreed that most of the upward revisions in the S&P 500 as a whole is due to revisions in energy stocks, but says that does not explain why analysts in other sectors are not lowering their numbers. And he says, and I quote, "The analysts in the other sectors are nuts. They should be kitchen sinking the numbers, talking them down, and they haven't done that." Why not? Because they're acting like deer caught in the headlights because companies still don't know exactly how inflation is going to influence their earnings for the rest of the year. So, that I think is still a potential headwind if all these analysts come on board and they're like, you know what, we're going to cut these targets for earnings per share down. And then all of a sudden the price earnings shoots up. And then that means the S&P 500 needs to once again get re-rated, gets readjusted down to 16 or 15 times multiple. Because if you think that $200 earnings per share can yield, let's say, a 16 times multiple, then we're sitting at 3,200 S&P 500, which is going to be another 600 point drop from where we are right now, another 700 point drop for the S&P 500. So it obviously depends on earnings per share and the P multiple that the S&P can yield. I think 16, 17 times are very reasonable, but then it all comes down to the actual EPS. And I went over all the EPS in my previous video. I highly encourage you guys to check that out because it goes over since the 1989. I compiled all the earnings per share and what type of growth rate we have seen for EPS and the total return for the EPS as well. So I think that's still a potential concern if Wall Street really has this growth scare that earnings are not going to accelerate and in fact slow down and even decline year over year, then that can cut S&P 500's target even further on Wall Street. So just wanted to go over that, and then just quick updates on individual stocks. So UBS reiterates Apple as a buy. SocGen downgrades Chevron to hold from buy as well. A couple upgrades on NVIDIA, AMD. So Bank of America reiterates AMD as a top pick, and UBS reiterates NVIDIA as a buy. And then finally, Goldman Sachs reiterates Amazon as a buy as well. So, wow, Tesla's at $638. Wow, $639, down 3.7%. We got Amazon down 0.33%, AMD, PayPal, Google, Meta, they're all red. Apple is slightly up close to 1%, but overall, Nasdaq here flat. We got the S&P 500 up over 0.5%, and the Dow Jones also pushing up 90 basis points. So it seems like Dow and value stocks are doing much better right now. So if you go over to our Dow 30 watch list, we've got JP Morgan up 3%, American Express, Visa, Goldman Sachs, Coca-Cola, Travelers, Apple, UNH, all of them pushing up, with only a few stocks like Salesforce is slightly down, Nike, Home Depot, and Intel slightly down as well. Etsy is, let's take a look at Etsy. We are coming down to our 52-week low, $75. I think my fair value sits at roughly $60 from the calculations that we did yesterday. So we'll keep a close eye on Etsy as well. And anything sub 60, sub 55, sub $50 could be very interesting for Etsy at those levels. All right, let's take a look at Tesla. So Tesla here has seen 2 consecutive weeks of red. Actually, 4 consecutive weeks of red. This is going to be the 5th week if it indeed close red this week as well. But sub 650 is where we are right now, and came down to $638 for Tesla. So 621. I wouldn't be surprised if we actually do find some buyers there. But the good thing is that we still haven't taken out previous week's low. So previous week's low was $633. So we came down to that level before the buyers stepped right back in. So we still haven't taken out last Friday's low, which was $633. So, that should be interesting for Tesla. But, always let the price come to you. I think it's really important to be patient. Sometimes it can be tough, especially in a very strong, bull market where there's a lot of quantitative easing and stocks are going parabolic. It's very, very difficult to be patient, and we are more sucked into the FOMO. But in a market like this, I think it's much easier to remain patient and allow for the prices to come down. There's no rush, right? The markets are going to be here tomorrow, the day after, next week, next month. They're not going anywhere. So it's really important for us to practice patience. And obviously, I was remember last week when I was like, oh man, Tesla 700, sub 700. I'm really thinking about buying. But now we have it at 650. So really, really important to really practice that patience thing. The price is coming to us just too fast and actually passing through us. I love it. Yeah, it is. I mean, it's coming. Well, Amazon came down to $2,000, right? Google, I'm waiting for 1,800. Nvidia, I'm waiting for 125s. AMD for the 70s. Apple at 115. Microsoft at 206. Don't know if we're ever going to see those levels. I mean, obviously never say never in this market, but it's still possible. Tesla has a lower forward P than its growth rate now. Yes, I think Tesla now is probably going to be sitting at roughly, if you take 12 or 13 times earnings, 657, 54, roughly 54 if you do 13, 50, and they're expected to grow by 50%. So yeah, just a little bit over 50 times earnings on a forward basis for Tesla. Ken says, why buy stocks now when you can buy them at zero? That's a great point. Yeah, I mean, when you can get them for free, why buy stocks now? No, I'm just kidding. I mean, how is something going to be worth zero, right? I mean, think about it, right? I mean, is $100 worth zero, right? That doesn't make any sense. Like if I give you, I mean, how about this? You give me $100 and I give you air. Is that going to make sense? Because I mean, these companies have value, right? They have some value. For example, even if I give you a simple example about Tesla, right? When you take out all their debt, right? If you factor in for enterprise value, they have value, right? So they're obviously not going to be worth zero. The markets, unless of course the world is done, they're never going to be worth zero, right? Because they have little to no debt, which they can all pay off. And after everything is said and done, the company will still have some value. And by the way, I was reading an article today, and there's a report where biotech sector right now has the highest percentage of companies trading below their cash value. Like below their cash value. 25%. So about a quarter of small cap biotech companies are trading at a market cap that is below the amount of cash they have on the balance sheet. Like that's the most abnormal and weird thing I've ever heard. And back in 2000, they were talking about how this number got up to 15, 16%, but it's never been this high, 25%. Obviously, biotech has been absolutely destroyed. I mean, if you take a look at XBI, it came down to a support here to its pandemic lows, so March 2020 lows, but it's just been selling off so much, down to 60%, right? So very, very significant sell-off because, biotech is probably one of the most speculative sectors because it depends a lot on FDA trials and testing and all that stuff. So, but yeah, it's just a crazy stat that a lot of these small cap biotech companies is trading at a lower price point than how much cash they have. So Lokesh, so isn't buying a company below its cash value a straightaway winner? Can you give an example on why not? So what we need to look at is the net debt. So one thing that wasn't clear in that report is that if that market cap for that company is actually below the net debt for the company, right? Meaning that after adjusting for debt, it doesn't necessarily mean that, let's say the company has $1 billion in cash on the balance sheet, and if it's trading at $500 million, it's an immediate buy, right? What if the company has $1 billion in debt, right? Then you've got a net debt of zero and a market cap is 500 million. So, that means it still has some value for the product and for the future revenues. So net debt is what we have to look at, right? If the net debt is negative, right, that's good because the company has more cash than the debt on the balance sheet. And then if the company is trading at a very, very lower price point relative to the cash on the balance sheet, then it makes a lot of sense. Then obviously the company is not going to go bankrupt, meaning the market is really pricing these companies that they're worth nothing. They're worth zero. That's how the market is pricing in for those companies. And yeah, you can definitely see a lot of momentum, a lot of growth for them in the future. Obviously, if the products that they're developing kind of works out, then there's definitely going to be opportunities in that space. That's why, biotech, I feel like, sure, I might be early in that sector, but I strongly do believe that biotech has potential, long term. Obviously, this is not the macro environment to be in anything that's speculative like biotech, but, long term, once all the dust settles with inflation and interest rates, there's going to be a lot of potential opportunities there. All right, so AMD here, $94. We got PayPal up 70 basis points, Google pushing higher, Tesla's back over 663, almost green here, with Facebook 194, Apple here up over 2%, and we got Nvidia up over 37 basis points, and Amazon also green, almost 1%. So it looks like the markets are a little bit turning back. Let's take a look at TQQQ. So we got TQQQ up 3%, came down to 27.20. So I shared a complete trade idea on a TQQQ in our Discord. Again, if you want to be a part of that, and of course get access to that, there's going to be a channel called Trade Ideas, and you can see the entire written piece on the chart on the Nasdaq as well. Let's take a look at how we're doing on the monthly time frame here. So 50 EMA, looks like we are finding some buyers here. We came down perfectly to 11,035 before the buyer stepped in. Yeah, so Lucky, I think that's a great point. I think you bring up a great point as well, because biotech companies do burn through a lot of cash. So that run rate is also something that we have to keep in mind, right? Just because the cash is sufficient today and the market cap's lower doesn't mean that that's going to be the case, 6 months, 12 months from now. So I think that's a great point that you bring up, that we also got to look into how much the companies are burning cash and how much of a run rate they have until they basically run out of cash. So I think that's also a great point. And then of course, share dilution for a lot of these biotech companies. One of the ways they actually raise capital is through share dilution. So that's something that I obviously personally hate for companies to do. That is just like highway robbery if you're actually propping up your balance sheet by raising a lot of shares. To some extent, I think it's okay. Like if you're raising shares, especially in the first 5 years or first 10 years going through your IPO, it's okay to do like 3%, 5% share dilution every single year. But after a certain time, you got to have a strategy in place on how to create that shareholder value with that excess cash, either by dividends or by buying back shares, and not really raising any more shares to dilute the shareholders, because that's such a big turnoff in my opinion. And if companies do 100%, 200% dilution every single year, that's just in my book, that's a big red flag. And then again, if you take a look at specific companies like, let's say Tesla, right? They have done share dilution in the past. I remember when a couple of years ago, I think Tesla raised $5 billion by issuing shares, but you got to look at it with respect to how much they're diluting and what type of business it is. And then there's specific case-by-case basis, like for example, TrueLeaf, right? Even though they don't raise capital by issuing shares, but even if they did in the future, for them specifically, because it's so difficult to get financing because they deal in the cannabis sector, no banks really want to touch them. And even if they do, they get some of the most unfavorable terms with really, really high interest rates, commercial interest rates. So on a case-by-case basis, we can understand. But if, as a general rule of thumb, if you've got a company that's issuing shares a lot every single year, then I would run as far as we can. All right, let's take a look at the markets here. Nasdaq all of a sudden now up close to 1%. S&P 500 is also at 1%, and the Dow Jones pushing up close to 400 points. Tesla is green. That's great, everybody. I love it. So, all right. Trading in the Zone is a very recommended book, not just for trade, but also for invest. I agree. I've read parts of it. I haven't read the full book, but I've heard really good things about it. Definitely. I think that's a great book. Lal says, I have PayPal at 170. Is it time to DCA? Well, it really depends. What do you think about long-term, about PayPal, right? Do you believe in the company long-term? And what was the original strategy? Was it a trade? Was it a long-term investment? If it was the latter, then, you got to ask yourself, what type of future do you see for PayPal 3 years, 5 years, 7 years from now? And if you believe that Venmo, PayPal with Amazon, that digital wallet engagement, everything is going to grow and move in the right direction, then in my view, that PayPal is, trading at about a fair value right now. And based on very conservative estimates, we can get at least a 12% annualized rate of return for the next 5 years. So yes, we can take a look at the rates here. Let me just reload this page. And there we go. All right, so let's see. By the way, I want to know from you guys, which of those 6 private companies that I went over are you most excited about when they actually go public? So let me know in the live chat which of those 6 companies. Again, there's more, and I'll probably do like a part 2 of that, and go over like another 5 or 6 private companies that will be doing their IPOs either later this year or in the future. But which of those 6 companies were you most excited about for going public? All right, a couple people saying Reddit. Yeah, Reddit was good, but that wasn't the one that got me the most excited. But yeah, Reddit definitely, I think, has a lot of potential. So Reddit, Daniel also says Reddit. Srinivas says TradingView. TradingView for me too. Like, I think TradingView's got a lot of potential, guys. I mean, if this industry is going to be growing in the future, right? Trading, investing, financial services industry, technical analysis, fundamental analysis, this is social media part of it. TradingView definitely has a lot of potential. I mean, definitely caught my attention, especially at a $3 billion valuation. I'm sure that's going to go up as there's more series and more funding rounds. But yeah, SpaceX is something that we can include in our next part 2 video on these IPOs, and we'll keep a close eye on how these companies are progressing. I think SpaceX also did a new funding round with about $110 billion valuation. I think that was the valuation for SpaceX, which again is really, really high for that company as well. Oleg says Databricks. I don't know much about Databricks, but as much as I've read, I do know that data is going to be a big commodity, one of the hottest commodities in the future, and there is going to be a big player in the data, sort of cloud computing and analyzing data in that sector. Whether it's Palantir, whether it's Snowflake, whether it's Databricks, we're going to find out as the industry consolidates in the future. So I definitely do see potential in that company as well. But man, did you guys look at the price to sales? These private equity investors are not playing. They pay like an insane price to sales multiple for these companies, like 30, 40, 50 times. Can you imagine like getting 30, 40, 50 times sales? Like, the founders of these companies are just like crazy swimming in money right now because of how much these private equity investors are just like paying, just throwing money at these valuations. But anyway, so 10-year yields at 2.8%, a little bit over 1%. We got the spreads all positive for now, except for the difference between 10 and 5, still negative 1 basis point, negative 2 basis point. So Arun says, I work at Databricks. Nice. We have somebody working at Databricks. It's overvalued. Yeah, I mean, roughly 30 a time sales, which is like crazy. Even Canva, $40 billion valuation. Canva is another one that I was super excited about for when they report potentially their IPO in the future. Real life money glitch. Yeah. So talking about data in the future, don't you think Microsoft, as an example, will just buy one of them up? I mean, when it comes to just like, companies buying companies, I feel like now it's getting more and more difficult with all the regulations. I think it's not going to be as easy for Microsoft and Meta and Amazon and Google to just buy their competitor anymore. It was like 20 years ago or even 10 years ago, it might have been much easier to pass. But now it's getting to a point where, any type of consolidation is going to be that much difficult, especially when you're talking about some of the large cap, tech companies. In the US, obviously competition is welcomed, and that's the way it's going to be. And I don't think Meta is going to be able to easily scoop up any type of competitor that comes on through. Even same thing with Microsoft, same thing with Amazon and Google. I think they have to fend off these competitors just by improving what they actually do themselves. So look at the FinViz map. All right, let's just do that. Let's take a look at where we are with the map here, with the heat map, and we'll take a look at the actual which sectors are doing well. So overall, I feel like all sectors are green, but banks are doing much better. Now, one of the things with banks is when interest rates go up, that's a good thing. Is Tesla really down 3% again? Okay, it's only down, it's down 2%. Amazon is down about 1.4%. Okay, so this might be a little bit delayed or it might be ahead. I don't know. So I think it's delayed by 10 minutes or 5 minutes. But anyway, so the reason why banks do really well when interest rates go up is because their profitability goes up, right? Is their net interest margin increases because they can lend the money out at a higher rate than they can than they borrow at, right? Because the depositors, when they park their cash in savings account, cash accounts, they pretty much give 0.01% to those depositors and take that money and lend it out at 3%, 4%, 5%. So that's the interest they're making. Now, the problem happens when we enter a potential recession or there's any expectations of a recession. If that happens, then banks do not do well, right? In a recession, banks actually hurt their profit margins because there's not going to be as much spending from consumers. People are not going to take on mortgages or auto loans and whatnot. And as a result, banks do hurt. We're in such a weird situation right now where, and I also mentioned this in our Kathy Wood video, where the Fed is probably tightening into a recession. Like we might be in a recession and the Fed is tightening right now. And that's something that Nancy Lazard also said from Piper Sandler. She mentioned that the Fed is tightening into a slowing economy, which is completely different from the 1970s and 80s. And I think the differences that they brought up were so eye-opening. And I think listening to Nancy Lazard and even Kathy Wood can't speak for her stock's performance or any of the picks that she has. Just looking at the macro picture, I think it was the first time that I really thought to myself that, you know what, it might just play out the way they're saying. It might just work, that inflation may not be as sticky as what many people believe to be, right? Inflation right now, 8.3%. But looking at some of the things that they presented with inventory levels and looking at 1970s and 1980s when both the government spending and fiscal stimulus was so high that it was more on a sustained level, right? For 15 years, that was on a consistent, sustained level. And as a result, inflation got super sticky and went up to 11, 12% and didn't really come down for a long time until, of course, Paul Volcker choked demand completely and jeopardizing the U.S. economy of putting it into a recession. But this time, we only saw that by 2 years, right? 2020 and 2021, where there was fiscal stimulus. Now, the government's completely pulled back. No more stimulus checks. They're gone. Spending has significantly come down. Sure, retail sales are up, but consumer debt is also up. People are taking on debt to spend more. Right? It's not like earnings are up or wages are up or savings rate is up. It's more like debt is up. So people are borrowing to spend more, which will soon also stop as interest rates keep going higher. And when you've got demand pulling back and such a surplus of inventory and supply, prices do have to eventually come down. Otherwise, companies are not going to be able to sell those products. So I think that was a good sort of, I don't want to say, obviously it's not, we don't know that it's going to play out that way, but it was a very interesting, deep discussion between the two. Definitely some good charts. Piper Sandler, for those of you who don't know, has an expectation for inflation to come down, for core to come down. Does anybody remember what that number is? By the end of this year, for core CPI to come down under what percentage? By the end of this year, in that chart. Does anybody remember? Come on, I want more engagement from you guys. So any idea if we buy Amazon after the record date for the split, do we get the 21 split? I think it has to be before the record date. I think it has to be before when they actually split it. So Oscar says 3%. So that was a headline CPI. That was a total CPI, but the core CPI, when you exclude for food and energy, it was under another percentage point by the end of this year, under 2%. So Spencer says 2%. Yeah, so core CPI, they expect under 2%, and headline was under 3%. And headline is going to be a little bit more elevated than core because energy prices still at a record high, and food shortages and supply chain issues, all that still is going to cause total headline CPI to still be pretty elevated. But man, if that is actually true, and we are like 7 months away from the close of 2022, that means some serious unraveling and unwinding down of inflation. And if that ends up happening, the Fed will have no choice but to pivot. Obviously in that video, they also talked about how the Fed is overdoing it already. We've only gone through like 3 rate hikes and the Fed's already overdoing it. So how are we going to achieve that? For the reasons that I just mentioned, surplus in inventory, demand is starting to slow down from the consumer. We've already seen a shift in Target and Walmart's report that people are not spending on, appliances or electronics or apparel or clothing or used cars. I mean, all those things have started to come down. majority of consumers' wallets are going on food and energy prices. Those are the two things that people are primarily spending on. And even in Walmart's report, they mentioned that they're spending the same amount of dollars, if not more. So average basket price was up 3%, more 3% higher, but they're getting fewer items. So that's the essence of inflation, is when you're spending equal or more to get fewer goods and services, right? And that really goes to show that inflation is indeed hurting, and as a result, spending could potentially drop. So we'll see what happens, right? We'll see if that actually is true. So look at Upstart. Oh my God, don't tell me Upstart's down like 9 or 10% today. All right, 5%. I mean, good thing we have a covered call. That's a hedge for us on days like today if it sells off. So yeah, I mean, just crazy swings for Upstart. But we do have the markets now. Nasdaq now down 34 basis points. We got the S&P still up, and the Dow Jones also still up right now. But look at Amazon, 2.7%. How are retailers doing? How are our retailers here? So we got Best Buy down 3%, Macy's, Home Depot, and Lowe's. And then BJ's continuing on that very strong earnings report, and they had that momentum going for them. Walmart and Walgreens recovering a little bit. TJX, Dollar General, Costco is just flat. Target is flat. But Amazon for sure dropping like a rock right now. So Oleg, why Amazon down with its AWS cloud lead, but rest cloud stock up? Yeah, I mean, Amazon is an interesting story here. I was talking about this with one of our members, that look at Amazon's market cap, just over $1 trillion, right? So that's where we're at, $1 trillion. Now, if you think about it logically, Amazon's AWS business, how much is that recurring revenue every single year? That is $75 billion, right? For advertising, they did $31 billion for advertising. So advertising is a complete comparable business against Google and against Meta, right? So Amazon's advertising business dwarfed YouTube's business in advertising, right? So $31 billion. And AWS is a complete comparable business against Azure and Salesforce and some of the other cloud computing businesses out there, software as a service business out there. So when you combine those two revenues, AWS 75 billion, advertising 31 billion, that's over $106 billion in revenue just coming from those two segments for Amazon. And if you assign, let's say, and what do you think advertising companies, let me ask you this. What do you think cloud companies and advertising companies can demand for a price to sales multiple? For a price to sales multiple, for price over revenue, price over sales, whatever you want to call it, multiple, what can they demand for cloud and advertising companies? Is it 6? Is it 8? Is it 10? Is it 12? Is it 14? What type of price to sales multiple can those companies demand? So I'll leave that up to you guys. What do you think? I have an opinion on it, but I obviously want to hear from you as well. So VictorView says 10. I think that's a perfect number. That's what I have in mind. That's kind of like what I think is appropriate. 10 times sales, right? For advertising for cloud. Microsoft trades at 12 times sales. Meta, obviously, after the drop, trades at a much lower valuation. Google, however, trades at 8 times sales. Oleg says 30. we're not in the private equity market, my friend. 30 times sales would be like something like Databricks or TradingView, right? So Pradeep says 7. VictorView says 10. Brightman says 8. So I'm gonna go with like about, let's just say, in the middle ground. Let's just take 8 or 9. That would give us roughly $800 to $900 billion market cap alone off of AWS and advertising business. This is not even accounting for their physical stores, their e-commerce, their logistics business, any of the other business, their international business, nothing. It is just accounting for AWS and advertising. And the company right now trading at $1 trillion valuation. So right now, what this shows is that Amazon, obviously they're not optimized for earnings. So earnings, Rivian is playing a big role. As the price is coming down, they're hurting. Their bottom lines is hurting right now as well with margins, inflation, all that stuff. Right now, what the market is really telling us is that their e-commerce business is worth nothing, And just based on advertising and cloud, it should be valued roughly $800 to $900 billion. So e-commerce is not getting priced for Amazon at the moment. John, has your green mic shipped yet? Yes, so it has shipped. It should be here very soon. Hopefully sometime this week. So we'll switch that for the green mic here. Hustle says this market is never going to recover. Why? Like I want to know why that's the consensus there. If this market's never going to recover. Amazon went back to 4 years ago. Yep. So I mean, lots of stocks are hitting their multi-year, multi-decade lows. So, all right. So let's take a look here. SPY 390. S&P. Well, all the markets need to hold, in my opinion, at least. S&P 3800, as long as it can stay above that level this week, and the Nasdaq can stay above 11K. We are in a decent position. If we break those levels, man, man, that would be crazy. Yes, so like I said, Amazon is never profitable in e-commerce. You're right. The margins are actually really low. They are still profitable on the US side. International sales, not so much. But yes, most of their operating profitability and their actual bottom line profitability comes from AWS and advertising businesses. So, those are, and even Jeff Bezos tweeted a couple of days ago, right? It was about the time, 2 decades ago when he was actually starting AWS. And it was one of the worst, according to Wall Street, it was a very unpopular decision of Jeff Bezos starting with AWS. I think at the time, the article read, Wall Street wants Jeff Bezos to focus on e-commerce, stick to selling books, something like that, and not really go into AWS. And look where AWS is now, right? So it was it's a really interesting tweet from the man himself. So what is this Upstart lawsuit? I don't know. Somebody mentioned it. I haven't looked at it. Let me just see if I can find any information on it. Oh, what? So something about Upstart failing to disclose some material information, and because the stock price went down, I think. Yeah, I think we've seen plenty of suits like these, which haven't really materialized into anything. If it's anything important, I'll mention this in our Discord, but this is the news from Friday. Okay, so yeah, I think so. Hustle Smart says too much fear. People have lost confidence in all markets, and it will take so much time to restore it. I think that's a great point. I think sentiment has obviously been a big role, or has been playing a big role for the overall markets, and that's something that we have talked about. And one of the things that is really important that we always have to keep in mind is that markets is a pendulum, right? It keeps swinging left and right. It keeps going from one end to the other. One end is all about greed. It's all about euphoria. It's all about markets going up and up and up. It's never going to come down. It's just like parabolic moves to the upside, 1000% gains. And then the other side is the other extreme where there's so much fear. There's like so much panic, right? The markets are never going to recover. This is it. This is the end of the markets, the end of the world. And the fair value or the actual mean should be in the middle, right? That's the fair value. That's the earnings per share. That's the fundamentals. But we never trade at the fair value, right? Even if you simply look at how the markets have traded over the last, several years, you can completely see that we have gone up, down, and all over the place, right? We've never really traded. I mean, if you draw a straight line, you'll notice that we have, become overvalued. We've come down undervalued, overvalued, undervalued, overvalued, undervalued, undervalued, overvalued, Now we're coming down to undervalued, right? That's a straight line. That's the earnings per share, right? Growing. That's the fundamental of the companies. And, we just go up and down and up and down. Yeah, I mean, sometimes the markets can definitely, well, sometimes pretty much all the time, are going to be trading on sentiment. But as long as you can spot good value, you really have no problem just looking at the price action, all day long, because it's going to be up and down every day, right? One of the things that I always mention is that when the company's fundamentals, think about that for a second, right? When the company's fundamentals change 4 times a year, right? Earnings, revenues, gross margins, all that stuff. We only get that information 4 times a year from the companies. When companies' fundamentals, which is the revenue and the earnings, change 4 times a year, how can the valuation of that company change 252 times a year? Right? That should put a little bit things in more perspective or more context here, that how much of it is actually traded on sentiment. So, and it all has to do with liquidity. It all has to do with access. It all has to do with information. Eric, yes, if cash starts giving value, people won't want to be in the markets at all. But when was the last time, cash gave any value? Right? When was the last time you can just park cash and earn 10% or 12% or 15% risk-free? I mean, those days are long gone. And if anything, 8.5%, 10% is going to be lost to inflation every single year, at least for now. So interested to know, what do you do if bear market persists until 2023? DC or sell and come back, or something else? So I think it really depends on person to person, right? Selling is always gonna trigger a tax event, right? So that's something that's why if I have a long-term sort of account, long-term portfolio, then I'm really not gonna be focused too much on a day-to-day fluctuations. If anything, I'm gonna be a net buyer throughout this volatility, throughout this sell-off. And by net buyer, I mean, sure, I'm going to trim some positions, I'm going to reallocate, make sure that the stocks are back down to my target allocation, but I will be mostly a buyer throughout that time. So this whole question about, I want to sell because the markets are not going to come down and then buy at a lower price, there's a few different things that are important to be discussed. Number one, well, nobody can time the market, so nobody knows where the bottom is going to be. Right? So even if you do sell the portfolio and the market drops 10%, great, you were right. But then do you buy when the markets go down 10% or not? Or do you wait for another 5%, another 10%, right? The second thing is, once you do sell, you immediately trigger a taxable event, right? Depending on which jurisdiction you're in, you have to, either pay taxes on the gains or you have to write off those losses. So that obviously is a very complicated issue, which cannot be, summarized in one live stream, obviously, and cannot be too generic because it has to be a very personalized way of looking at it. So those are two issues, obviously, with selling and just getting back in later, that every person needs to evaluate on their own. But if you do have an options account or options portfolio or a trading account, then yes, there's a lot of things that you can take advantage of, right? You can buy puts, or you can sell covered calls against your shares. You can even sell cash secured puts to collect premium and lower your cost basis and buy more shares. You can buy leaps, right? Leaps, I think, are going to be super interesting in this environment. The only problem is the cost for those leaps has really gone high. So for example, I've been looking at, like SoFi, or I've been looking at Square, PayPal, Meta Platforms, like some of these companies. And the problem is that the price of the leaps are just as high, if not a little bit lower than the actual price of the stock. So I'm going to be doing some more research to go over some leaps to be buying in this environment, because when stocks are already down, let's say 40, 50, 60%, with Leaps, the great thing is that you can limit your downside. You spend half the amount getting access to 100 shares as you would for the actual stock price, and then at the same time you get full upside. You get 1-to-1 upside for that stock, right? So it's a great way to lower your downside and increase your upside potential over the next couple of years, right? However long out you choose that leap for. So I'll do a video on top leaps to look into. And if you want me to go over specific stocks, I can go over it, because we have a leap calculator that we run through and we look at the intrinsic value and the yield that you need to generate. So that will also be very beneficial in this environment, considering how much stocks have already fallen. So I feel you're about to finish the live stream. Please don't. Yes, you're right. You're almost here. 10:20 a.m. here. John Creatures, thank you so much for that. I really appreciate that. Shout out to Portugal. I love the flag there. And yeah, I'm supporting Portugal for the World Cup, by the way, later this year. So hopefully they win. And yeah, not sure if you guys did check out the Premier League from this weekend. I was absolutely gutted that Aston Villa just bottled the entire game. And so yeah, I was really pissed at that. So Lawson says, Leaps is just gambling. I'm not touching them. So, okay, I respect your opinion, but in my view, I don't think they're gambles at all. I think if you can find really good deals in the market for Leaps, I think they can be very, very lucrative. They can, really, on a percentage basis, they can really increase that gain. So, come on, you rather have Liverpool win? No, I would rather not have City win, because I'm a United fan. So, the last thing I want to see is City win the league. So I would have rather taken Jurgen Klopp win, because he's worked really hard and I do like Salah, than City. Come on. But yeah, it was just a fun games to watch. I mean, 3 goals in 5 minutes. Absolutely crazy. I know. It's wild. But anyway, so guys, that's going to be it from me here. The markets overall right now just more or less flat, especially the Nasdaq. We got the S&P slightly higher, 72 basis points. The Dow is doing much better as the value side of the trade pushing higher. Banks are doing much better today, so up over 1.19%. So thanks again for joining. I really appreciate it. 3,800 is what I'm watching on the S&P, 11,000 on the Nasdaq. Volatility we haven't touched on, but it's still pretty elevated, well over 30, but still unfazed in this bear market. It hasn't really broken past 40 this entire year. So that is something to keep an eye out for. If you do break past 40, then things could, slow down a little bit, and the S&P could start to drop even further. But thanks again so much. I really appreciate it. Make sure that you drop a like, and of course subscribe if you are new to the channel. Yes, 3 goals in 5 minutes, just like the market closing. Absolutely, it's just last moment. So it's not over until it's over, right? I always tell you guys that it doesn't matter where we open. It all depends on where we close. Same with sports as well, right? Whatever sports you're watching doesn't mean anything until that final whistle and until the game's over. So thank you so much for watching. Really appreciate it. As always, make sure to drop a like, subscribe, and of course the Patreon link down in the description if you want to join our Discord. Happy investing, and I'll see you guys tomorrow morning for another live stream.